Hey guys, this is Eric Garland with Success Over Stress, third time's the charm. I've done this twice already. One time I ran into an issue with coding, so I fixed that, but you went with me through the ride. Nevertheless, the video was too long. Second time, the video didn't record for whatever reason, so this is the third time. All right, so pretty much I just changed something on one of my watch lists, and I thought it was pretty cool, and I said, man, everybody else would like to know that too. So I'm gonna try to keep this under 5 minutes this time. But so for the basics, you want to be able to get into a stock that's got a potential to move, but then you still have a chance to kind of analyze it and check it out before it gets to moving too fast. So your watch lists and alerts are important. I think ThinkorSwim does the best job with watch lists and alerts than any of the other ones. And by that, I mean the ones that I use, which are TradeStation, ThinkorSwim, Webull, and E-Trade. Webull and E-Trade don't allow you to do your own coding. TradeStation and ThinkorSwim do. ThinkorSwim, I tend to like a little bit better, maybe because I've been trading with it for the longest, but nevertheless, let's go here to Market Watch, and then you see here change gainers. All right, so change. Let me do this. I'm gonna move this, and then I'm gonna tap this, move that, then that'll give me that. Get that out of here. All right, so change gainers. If you go here, you can go to public. You can see all these watch lists that have already been created by ThinkorSwim. So it allows you to access these kind of scans, these filters, without having to figure it out and set up these filters yourself. But I like to take the public percent change gainers scan. I take that, and you see it has this many, but so now I want to still filter this a little bit more. So I go over to scan. You can set up a scan. All right, let me see. I think I have to go here. You can, okay, there we go. There's my arrow. All right, so you can set up a scan. You can scan within what bucket are you going to use. So I'm going to use a percent change gainers bucket. I want to intersect with none. I want to exclude all OTC stocks. The OTC stocks are the over-the-counter stocks. ThinkorSwim, I guess it's Schwab now. They charge you a certain amount to do an entry and an exit trade. So whether it be $3.95 or $7.95, I don't want to pay either of those. So I trade on the major exchanges, which are like the NASDAQ, American Stock Exchange, and the New York Stock Exchange. And those are free. I mean, there's a nominal amount, but I mean, you never see it. All right, so I like to exclude those OTC stocks, and then I come down here, and once again, if you go to the Market Watch, if you go to the percent change gainers, it's going to have stocks anywhere from like $5 up to a couple $100. So I want to filter that out. So I only want stocks with $3 at the minimum, $25 at the max. And then I'm going to come down here to the volume. I want a minimum of 500,000 shares traded and a max of none. The reason why I want to have a minimum is because you got to have liquidity. You got to be able to get out of a stock. So if you get in at the low, if you get in at demand, you want to get out at supply, that volatility, that range is what you're looking for. You need to have that volatility if you're a day trader because you need the movement. You need to be able to capture the movement to make money, right? So if you have the movement though, and you don't really have any liquidity, you might have the movement, but you might have one person willing to buy down here. You might have three people willing to sell up here. But either way, if you're buying, if you end up being the buyer and you buy 100,000 shares, but you only have people willing to sell 5,000 shares, then you looked at it right. So you got the distance, but you can't sell. You're not able to sell there. You don't have the liquidity to sell. So now the stock moves below your entry. You get hit with the stop loss, and now you end up taking a loss. So we don't want that. You need to have both volatility, range. You need to have liquidity. You need to have the amount of volume. So the range that we're looking for, we're capturing that by looking at the percent change move, and the liquidity that we're looking for is volume. So we're looking at the amount of volume. So in this new column that I made over here, I'll right click it. I'll go to edit formula, show you what it says. It says that I'm multiplying the volume. So I'm capturing the volume and I'm capturing the percent change. So I'm just multiplying those one times the other. So if I got a percent change, that's a positive 1. If I have an amount of volume that's 1 million, 1 times 1 million, 1 million. If it goes up 2%, 2 times 1 million, 2 million, right? So I capture both of those variables all at one time, and it's in a column, and then I can sort that column. So I'm gonna, okay, there, sort that column. Okay, and now let's go to, just go to one of the trade screens. All right, so now you can sort the column from top to bottom, and you can see that this has a lot of movement, a lot of volatility, and it also has a fair amount of volume. Okay, this doesn't mean that it has the most volume, because we're combining both the percent change and the volume. So it doesn't mean it has the most volume. It doesn't mean that it has the most percent change, but the combination is there. All right, so, but if you want to go back and you just want to look at to see which one has the most volume, it might not be SI, it'll be Snap. Okay, so today Snap has the most volume, but look what it did. It came up here, came up with a pretty good range, a lot of volume, pretty good range, but then it's just going over sideways. And even though it had a decent range for what it looks to be on this chart, I mean, literally from the open to where it's kind of rolling over at is 10%. Now you got other stocks over here you can see that went up more than 10%, right? And that's why we want to combine the two. All right. And I'll show you what I did. It might help somebody. When I was making my formula here, when I was making my formula using the percent change, I ended up finding out that as the base, as the, not the base, the default number that they put in for length on percent change, they put 14, right? So I typed in percent change and then I clicked go, and I thought I was good to go, but so it's 14. So that would be comparing the mark from now to 14 days ago, right? And of course we're not looking for 14 days ago, and we know it's days because D is referencing the aggregation, I guess the aggregation. All right, so we want that to be 1, so it's referencing last day, the last day. All right, so click go. We got something. This is Eric with Success Over Stress. Please like, subscribe, comment. I'm going to do one of these videos, 2 of these videos. I'm going to do these videos every day because I'm really moving into my strength of becoming a professional day trader. And the more that I do with you guys, the more videos that I post, the more that I get engaged with the market, with the platforms, the smarter I'll be, the quicker I'll be, the better equipped that I'll be to tackle the market. So if you don't get anything from this, that's fine. If you do get something from it, cheer me on. Let's win together. All right, this is Eric. I'm out. Peace.